Hey, what's going on everybody? This is Yusef Scott, and today I have another video to show you guys some of my previous trades. I'm going to show you some trades that I had taken in the past. Just before I had taken a break, I had placed these trades in maybe sometime in December, and I closed them out early January. And shortly after I had taken a break, and of course, if you guys have been following me, my loyal viewers and subscribers, I'm back. So now I want to show you guys one of my last trades just before I had taken a break. All right. Now, for those of you that have been following me all along, you know that the GBP and ZD is my currency pair of choice. All right. There's a lot of money to be made on this pair. It's quite fast. If those of you that are familiar with the GBP JPY, you'll understand how fast that is. This pair is just as fast, if not faster. All right, and it moves very, very, very heavily. All right, so let me just show you. As you see, we're on the daily chart. All right, and I like the daily chart. It shows me a lot of clues, and you know the moves are more accurate than some of your smaller time frames. But let me go ahead and jump into this. Let me go ahead and bring up the screenshot. Okay, so this was a screenshot that I had taken back then. You know, I was on my mobile device and I had taken this, and I just wanted to go through this actual screenshot. Of course, this is within my history panel, and it shows that there was a profit of just about $23,000. These were my 4 trades, and as you see, I was trading 4 trades at $15 a pip. All right, and I got in at 224.225. And I had closed out my trades at 218.975 ish, around that area. All right, so let me go ahead and move this out of the way so you can see the chart. And I already have my arrows drawn on when I got in and when I got out. So what I'm going to do, let me just increase the size on this, and I'm going to show you why I got in when I did and all that. So as you see, let me bring this back up so we can get the exact numbers. So I got in at 224.225. All right, now I know that was this candle right here. Okay, that was this candle right here, and I got in at 224.225. So that was somewhere around this area, somewhere around here. I got in. All right, and it was on December 14th. I got in. All right, now the reason why I got in here is, if you notice that, and let me shrink this back up. If you notice that this area right here was being supported by my moving average. All right, my white moving average was being supported by that. I'm sorry, price is being supported by the white moving average. Okay, and once I saw the consolidation building up in this zone, I was just waiting for a sign for me to actually get in on a sale. All right. So looking at this, I saw that it had already bounced off the aqua here, and it was going down. All right. Now it just came from a major run up, and I was in on this trade from April all the way up until September. I got in on this trade. I made great money here. This was the Greece situation here. For those of you that remember, it sent a lot of currency pairs into a frenzy. The market slammed up in minutes, and people made a lot of money. But nonetheless, after it dropped, after I realized the resistance area here, I'm going to draw a line there for you guys. It showed resistance there, and then if you look back, that same resistance area, so that same resistance area, if you see that it was bouncing along here and using that same area as resistance, and I knew that it was a strong area, and you're talking about going back to 2009. So that being said, I knew that I was in on a good opportunity going down. I knew that it was going to be going down for a while. So and then of course along the way it bounced off moving averages. And when I saw this consolidation area here, and I saw this candle where the arrow is, I saw this candle there, I knew that it was time for me to actually get in. So I got in and I rode the market all the way down until it reached, it was pretty much using moving averages, this moving average zone here, but really this is another area that it was using as another support. So when I saw this, I said, all right, I see that the market is holding steady at this area. I might want to prepare for my exit. So over a course of a couple of days, I saw that the market had continued to stall, and then on this candle here, the market presented or painted a bullish engulfing candle, which to me that's a sign to get out. So I waited for confirmation, and once I saw that the market had, of course, engulfed, its previous candles, and it moved up quite significantly, I thought it was time for me to get out. Just take what I can and get out. And that's why, if you see here, I got out at 218.976. All right, now let's find 218.976, although I have it there already. 218.976 is somewhere around there. So that's 218 at the very top of this candle. Was where I got out, or it may have been the next candle, 218.976. Yeah, I got out on one of these two candles. It was the next, because I felt like, okay, the market is showing me now that it's going to go up. It's bouncing off this level here, and when I use this, let me get out of here. Let me just highlight this so I don't get it mixed up with the other one. Make this one like a magenta. And let's look left and see how many times this area have been used. As you see, it was all between here, and this is going back to 2010 as well. Bounced off here, 2009, bounced off here again. So with that being said, I knew that it was time for me to get out. And that's what I did. And I got out of the market, and that was, as it showed, it was, let's go back here, January 5th, right? So I got out on the second candle, which was here. So I got out on the second candle, and I see now why I did that, because the market had backed down. It backed back, although it was still engulfing, it back down at the end of the day, more than likely. And I said, well, let me see what the next day, what happens. And when it showed that it was still it was still following the momentum up, I got out. And I got out on a profit of just about $23,000, which, to me, that's a nice piece of change. So I wanted to show you guys how long-term trading, you have to, you got to have the patience. You have to develop patience in the market, because on your daily charts or your long-time charts, 4 hour, whatever it is, you're going to find opportunities in the market. But at the same time, you have to understand that just because the candle might be going up on the daily chart, at present, on an hourly chart or the 15-minute or 30-minute chart, it might be going down. So you don't want to be confused with what's going on now, with what the big picture is. And the big picture, looking at the daily chart, was that the market had changed. Although I got in, it was going down with the momentum. The market was now going up. So it'll present a different picture for you when you're looking at different time frames. So these are some of the things that I impart on my students. I definitely want for you guys to really understand this. Trading Forex is not that hard. It's pretty simple and easy. You just got to keep the basics in front of you. You don't want to get your mind and get yourself caught up in all of the everything that's you don't want to be looking at too much stuff. Just keep it simple, and that's why I use simple techniques when I'm trading. It's very simple and easy. So if you keep that keep that in your mind. You know, you can't go wrong. Just like in one thing that I always tell my students is that just like in math, when you get to some of the advanced um, courses in math, talk about trigonometry, maybe algebra, trig, you know, all that stuff. When you get into that stuff, it's all based on addition, subtraction, multiplication, and division. It's based on those four parts of math. So when you keep it simple, everything is based on the simple and you know the foundation. You know, all the basics is based on the basics. Then it start to get a little tricky if you know, if you start looking into things and you want to look at the Fibonacci and all this stuff, you wind up getting yourself screwed up wanting to look at all the complex um, parts of Forex when you can just keep it simple and realize what the market is really doing, you know. And one thing, it's okay to want to learn all the extra stuff. It's okay, but don't get caught up with it, because if you look at the basics, it'll show you what's going on in the market. So that's all for now, you guys. I just wanted to show you guys some of the um, one of my long-term trades, which I was able to you know, really maximize my profit potential. Just finding these opportunities in the market, always, you know, you can always reap the benefits. So that's it for now, you guys. I hope that you guys are you know, enthused by this video, and I hope that you're interested in learning more. I'm about to really drop a lot of information on you guys in the days to come, so be prepared. Thank you so much for subscribing. Thank you so much for continuing to watch my videos. You know, I really want to bring awareness to the to everyone who's looking at Forex for the first time, because there's a lot of stuff. People are being misguided, whether online or wherever. People are being misguided, and you know, it's time for me to show you guys the really, like, what's really going on in the market, and trying to keep it all simple. All right, so with that being said, you guys, I definitely appreciate you guys tuning in.